Hi everyone, this is Rob Roy and welcome to the LA Wave Options US Market Update. And boy, what a start to the week it's been, starting off Sunday with President Trump's tweets that he was going to impose higher tariffs on China. On Friday, markets sold off big, futures were down Sunday night, market followed through but then rallied back to the close, and then today back down we go again. A little bit of a rally to the close today as well, but nothing like we saw yesterday. Now last week we talked about the fact that we would likely, at least it was my opinion, that we would go to new highs, pull some of that retail trader money off the sidelines as the media glorified the fact that we were at all-time new market highs, and then that was going to be the signal once the retail traders came in for the smart traders to start to get out. Well, in all honesty, I expected that we would go a little bit higher first, but let's take a look at the charts, and anything is able to change this week as we have the talks coming in, at least we think, on Thursday and Friday from China as the trade contingent comes in. So here we are. Here's our chart. We did have an alert that was sent out for our volatility strategy subscribers. We had a strangle on the SPY, figuring that we were either going to break to new highs or we were going to sell off. And so we did actually close that off with a nice quick 50% gain on the downside move today, but we'll see if we should have held it or waited a little bit longer. But we'll talk about the commentary on why the decision was made, and I've got some of the notations here on the screen as you can see. But before we get to that, let's just take a look at where we were, and here were those recent highs, and you can see that we did make new highs, but just ever so slightly, and that's not enough to it was just enough to get the headlines out of the media, but not enough, in my opinion, to bring the retail traders back in off of the sidelines. So then we headed back down again based on what happened yesterday, and the reason that we had the strangle was the fact that we were in an extended wave 3. We could have this wave 4 correction at any time, or we could blast to the upside on the new highs if the retail trading money did come in off of the sidelines. So market could move either way. Strangle's the perfect opportunity to take advantage of that. So what ended up happening is we went to the downside and we had the strangle on. Obviously the puts are the options that are making money, but we started to get this here where we had a separation, is what I'm noting, from the 10-day moving average. Remember, I've commented in the past, no security in any time frame gets very far away from the 10-day moving average. It just doesn't. So we were starting to see that separation in today's trade, and we were nearing that 50-day, the blue line, the 50-day moving average, which could act as support. Maybe the market bounces off of that if we're just a little bit extended on a short-term basis. So we decided, let's take the strangle off. Again, a quick 50% gain, and then we'll rest, see what happens as we move towards the end of the week. Are the talks on? Are they not on? Are we going to have a deal? Are we not going to have a deal? All that's going to play into where the market goes from here. And I did want to show you, I mentioned that we did get a bounce back towards the close. And look, at least for today, we look like heroes because we took the strangle off when the puts were at the lows. And then you can see there's the closing price right there, the notch to the right, where we did come down, tapped that 50-day moving average as expected, and then we rallied up and closed well off of the lows, but still a down day. Well, again, that could only be short-term support, especially if the talks don't go well towards the end of the week. If they do, maybe we get a bounce back up and make the new highs, and that scenario of bringing the retail traders comes in. Maybe nothing comes out of it, and maybe we get a much larger correction with the lack of a trade deal, and we create this wave 4 that's set up to show us where the potential wave 4 would be if we sell off. So that's where we sit in the market itself. Looking at the VIX, you would expect a spike in the VIX with the fact that we had to sell off. We did get that, not a massive one, but a bit of a spike. And you can see with the rally, it brought the volatility down quite a bit into the close. So we'll see how the futures trade overnight. If there's any news that comes out, is the Chinese contingent still coming? Are they not? But we did get that bounce, and that wasn't unexpected either off of this support level that we've had down here at the 12 area. We've talked about that in ad nauseum. Also wanted to show you TBT because interest rates obviously factor in. But the other thing is this gives us an idea is the money moving into the bond market. And remember, bonds move inversely. Prices go up, yields and rates go down. Prices go up when money moves into the bond market. So when you see that you get a sell-off in the equities market, but really not a whole lot of buying into the bond market, well, that tells you that people aren't running for the exits yet. It's just a run-of-the-mill average sell-off. Well, in this case, we are seeing money move into the bond market as rates are headed back down. So that tells you prices are up, rates are down. So some money is running into the bond market with this sell-off in the equities market. And at first blush, you look at this and say, well, wait a minute, could this be a zigzag pattern where we're coming up, we have our correction, and then move back to the upside? As we know, we will eventually make it back to this previous 4. But for now, we simply came up, closed the gap, we talked about that, and then headed back down. So it looks like that's a potential, but then we have to do our research and our analysis. And so when we put on the fib retracement level, you can see that we closed below the 61.8% level. Well, when you close below a fib level, that normally means you're going to the next one. And if we go down to that 78.6% level, that nullifies the theory of a potential upward zigzag. So we'll have to watch and see. Tomorrow is going to be very important as far as the bond market goes to give us any sort of insight into what may be coming on the equities market. If we touch that 78.6% level tomorrow, then the zigzag theory is out the window, and then it looks like we are going to come down and create an extended wave 5 on the way down in the bond market, which means lower rates and money moving into the bond market. That's not a good sign for the equities market. So awful lot going on, and we'll see how the next couple of days go. It's going to be interesting and nothing less, and I think it's going to be a bit more volatile than what we've seen over the last several months. Great for the volatility strategy, and we'll see how things are going to set up for the rest of the summer. Hope you've had a great week. We'll be back to talk to you again next week. Take care, everybody.